Okay, so this is what everybody's waiting for, is the FOMC, which as you can see, Wednesday US or Thursday morning our time in Australia, and we've also got Aussie inflation ahead of us. Last week, with a bit of a mixed bag in that, yes, inflation was higher in UK and Canada. BOJ, sorry, the ECB surprised with 50 basis points, and then all the PMIs were a pretty big miss, particularly over in the US. And we got a bit of a sell-off in the bond market. So I guess there's, with that sell-off in the bond market, there's the concept that FOMC this week, everybody's looking for 75 basis point move, as you can see, from 1.75 to 2.5. That is, there's a lot of talk that there'd be 100 basis points up to 2.75, but now the sentiment and the direction on Friday is that might not even get the 75, might only be 50 up to 2.25, and the risk of a recession is getting higher. So if the US do 75 basis points, they might have gone too far, too fast, and send their economy crashing into a recession. It's probably going to crash into a recession anyway, but how hard it hits is, I guess, the question on everybody's lips. But certainly the bond market is not getting that bid and not getting that rally into FOMC. And I see that this head and shoulder pattern on the bond market, and that neckline is the market sort of closed right on it, basically on this low here. And I think this is the yield, right? So I think we're looking at that direction for the bond market, which is generally thought to be good for stocks, because the cheaper money out there is good for stocks. But with the recession looming, earnings coming out as poor, the idea of buying stocks is not fabulous either. So where's money going? Well, it seems to be into you're not going to be buying bonds because you've got yields falling. You're not going to be buying stocks because they're under threat as well. They came off on Friday, so it looks like cash is king, although the yen and gold and Bitcoin also had a bit of a bid. So we can see the stocks here closing a little weaker on Friday, but had a pretty good week overall, but finishing the end of the week a little weaker. And we can see gold here getting some buying, and cryptos also, that's 4 hour. Crypto also a little weaker throughout the week, but on Friday they had some buying come in, and so we're seeing the different safe haven flows. We're not seeing it into the US dollar because of that bond market. US dollar pretty much unchanged, and it's in that zone that I thought I wanted to be a buyer, or suggested it would be a good place to buy. Now, without the safe haven flow, I doubt the US dollar strength is going to be there, with bond market coming off, US bond market coming off, and I guess the safe haven flow being seen in yen and Swiss. As you can see here, the Swiss getting stronger, the yen getting stronger. I think that's the picture for this week. Trading the US dollar is going to be pretty tricky, and you might, this looks, the Aussie dollar here looks like a good setup for fading that reversal, but I think you might be better off looking at the crosses such as Aussie yen or Aussie Swiss, Euro yen, looking for a strong currency, and the yen and the Swiss are strong this week versus a weak currency, and the commodity currencies are the weaker pairs. Excuse me. So you want to be selling the CAD yen, the Aussie yen, maybe even selling the pound yen, euro yen, because the eurozone continues to be to weaken. So that's the bond picture. Commodities, we've got iron ore continuing to hover down here at just over 100, and other commodities also showing some weakness, and the commodity index just tracking sideways. So the commodity markets are still should remain under pressure. And yeah, it's going to be tricky with the FOMC. The market, I think, will tread water a lot, just do a lot of sideways choppiness, which makes it difficult to trade until we get a clear picture of the forward guidance out of the US Fed. Alright guys, I'll be back tomorrow to discuss more. Thanks.